Thanks for tuning in, guys. The webinar goes live in just a few moments. A very happy Dhanteras to everyone. Welcome to our special webinar on Diwali Muhurat Picks. We are excited to share insights from our research report, expertly prepared by Neeraj Chadawa, our Head of Research, Fundamental and Quant. Join us as we explore promising stocks to help you make informed investment decisions and light up your portfolio this Diwali. Stay tuned until the end, where we'll reveal a quick way to add all the featured stocks to your portfolio with just a few clicks. Over to you, Neeraj.
Thank you, Rohan, and thank you to all the participants for joining our special webinar on Diwali Muhurat Picks with the title Diamonds in the Dust. First of all, I wish all the participants happy and prosperous Diwali. We hope this festival brings light to your financial prosperity and overall well-being. I hope my slides are visible. Rohan, could you please confirm?
Yeah, your slides are visible.
Thank you so much. So I will divide my webinar in three parts. First for a couple of minutes, I will take you through the last Samvat. How was the journey of Indian equity market in the last Samvat? The second part will be what one would expect in the next Samvat, that is Samvat 2081. What are the different events which are in pipeline? What are the expectations from the market for Samvat 2081? And what are the different themes which could emerge as a theme for Samvat 2081? And based on that, top 9 investment ideas, especially for Diwali Muhurat Picks. So this will be the overall structure for today's webinar. So without wasting time, let's get started. So let's first talk about the rear view mirror about the Samvat 2080. The last Samvat was a very remarkable Samvat for not only for Indian equity market but for the entire equity market across the world. We have seen that with every incremental quarter, Nifty has touched the all-time high level. And we have reached to all-time high level of 26,216 on 26 September, first time ever in the history. With this achievement, Indian market cap was crossed almost around 5 trillion market cap, making the fourth largest market in the world. This achievement is phenomenal achievement for the Indian equity market, making to fourth largest market in the world. With this, till last week, Indian market went up by almost 25%, that is Nifty 50, and the broader market, mid and small cap, went up almost by 37% since last Diwali. If I talk about the first part of the Samvat, that is the first part of 2080, that was marked by three back-to-back events which turned in the favor of equity immediately after the last Diwali. The first event was the winning of 3 out of 4 state election by the ruling government. The second was RBI's decision to maintain status quo along with the upgradation of FY24 GDP. And the third was dovish stance made by FOMC meeting by the US Fed. All these three events turned in favor of Indian equity market, and we saw a solid rally in the first half of Samvat 2080. As the weeks goes by, as the month goes by, we have seen continuous improvement in the high frequency indicators, continuous improvement in the India's GDP as compared to the other emerging market, and sequential improvement in the quarterly earnings of the Indian corporate. All turn in favor of Indian equity market, and we saw a solid narrative based rally on the continuation or of expectation of the same ruling government or in the union election of 2024. With this, we enter into the second half of Samvat, in which we saw a little bit volatility in the market, especially on the election result day, that was on 4th June 2024, in which all the benchmark indices saw a deep correction based on the verdict, which was not as per the expectation of the market. But the week passed by, the market got the clarity on the formation of NDA 3.0 government. With this, market further regained the confidence and back to the normal trajectory. On top of that, we had a budget during the month of full year budget during the month of July, in which our finance minister further set the tone for Viksit Bharat with a comprehensive economic development, which focusing on fiscal prudence, welfare scheme, and other rural development scheme, on top of the continuous demand for the capex from the government side. All translate into a solid recovery in the Indian equity market. The domestic liquidity was very solid. The domestic investor continuously showcasing strength in the India growth story. With this, the monthly SIP flow has crossed 24,000 rupees per 24,000 crore rupees per month for the first time in the history. This is the greatest achievement for the Indian equity market. Now with this setup, now we are entering into the Samvat 2081. Now the path for Samvat 2081 will be completely different from the last Samvat. The trajectory will be completely different. The events will be completely different. Now we begin the Samvat with a global rate cut cycle, in which during the month of September, US Fed has already cut the interest rate by 50 bips. And they showcase their interest to cut 2 more rate cuts in the current calendar year 2024, and showcase their inclination to cut 25 bips rate cut in 2025. In response to this development, RBI in the recent MPC has also shifted their stance from withdrawal on accommodation to neutral. This step is considered as a signaling step to the market, saying that in next 6 to 9 months, RBI is preparing market for the first rate cut. The change in stance meaning that RBI is preparing market for the first rate cut anytime in next 6 to 9 months. So for Samvat 2081, we anticipate one or two rate cuts from the RBI based on the inflation and the growth dynamics. In all, at least we expect one rate cut from the RBI, and that is the biggest event for Samvat 2081. On top of that, we continue to grow at a faster rate. FY25 GDP will be at 7.2%, which will be the one of the fastest growing country across the emerging market nations. On top of that, this year the monsoon was very solid. We closed June to September monsoon with 4% above the long-term average. Additionally, the special distribution of the monsoon was very great. Monsoon rainfall was across or spread among June to September, and the exit rainfall during the month of September was also very good. This is translate into a good reservoir levels for the country. What it means? It means that these conditions are favorable for the second crop, that is known as Rabi crop in the rural India. So it means that second half of FY25, there are multiple green shoots available to revive the rural economy. Along with that, the government push which has given in the union budget, which was in July 2024. So overall, the outlook for the economy looks brighten at the current moment. On top of that, there are multiple monitorable events ongoing in the market. Now, the two biggest events of 2024 are behind us. The first was union election and the second was the union budget. Now, the biggest event which market is tracking currently is the development towards the US election. That is the biggest event where the market is waiting for. Market is also keenly watched the economic recovery in the China. We know that in last 1 month, China has given multiple stimulus to revive the Chinese economy. What we believe that the current stimulus is not enough to increase the trajectory in a meaningful way. But still, we need to monitor the development towards recovery in the China. We also need to monitor the festival activities. Along with that, the trajectory of the US bond yields. The US bond yields inch up by certain bips in last 15 days. The Fed meeting is scheduled in the first week of November. Along with that, one more meeting is scheduled in the month of December. The market is keenly watching the trajectory of the rate cuts. Market is also keenly watching the oil prices trajectory, the direction of the oil prices, because we are in the Middle East crisis. All these development is likely to introduce volatility in the market, and market is likely to respond in either direction. And based on that, the long-term growth story in any case is intact for India. We continue to believe that India growth story, even in this volatile growth and volatile scenario of global landscape, the India growth story continue to remain attractive in this volatile world. However, the current valuation offering limited scope for further expansion. Rather, the expansion in the valuation, the increase in the corporate earning will be the primary driver for the market going forward. That's why I started with the notion saying that the path for 2081 will be completely different from the last Samvat. This year, the majority of the alpha will be driven by the corporate earnings. Hence, the bottom-up stock picking with focus on growth at a reasonable price and the quality ideas will be the key to generate satisfactory return in next 1 year. We suggest buy dip strategy in all our Diwali Muhurat picks because these are strategically chosen stock ideas based on the 4 themes. The first theme, companies with higher growth potential with reasonable valuation, leadership position in respective businesses, company with a proven track record of improving return ratios, and at last, the right combination of stocks which are in favorable with the rate cut cycle, the defensive play, the capex play, the consumption, especially the discretionary consumption play, and the export oriented play. So based on this, our Diwali Muhurat picks under the capex play are Gravita, Inox Wind, and HG Infra. Under the export oriented theme are KPIT, that is the IT outsourcing company. Under the discretionary consumption play are Indian Hotel and the Uno Minda. And the rate cut cycle plays are AU Small Finance Bank and the real estate play Arvind Smart Spaces. And at last, we have also added the defensive play of pharma company Lupin Limited. So let's go by one. Why we have chosen these stocks? What are these stocks are all about? So these are our long-term picks with an expected upside potential ranging from 18% to 38%. We recommend buy on dip strategy in all these counter with an investment horizon of more than 12 months. You can invest all these 9 stocks in a single click by investing in our small case basket of Diwali Muhurat Picks Samvat 2081. The minimum investment amount is only 20,000 rupees. You can invest in all the 9 stocks with a single click and you can have a exposure to all the 9 stocks with a single click of 20,000 minimum investment. Let's talk about our last year's performance. That is Samvat 2080. We released this report on 23rd October. So that's why we closed this basket as of closing of 22nd October. So since last Diwali, this basket went up by 38.5% versus the Nifty 50 return of 28%, outperforming the Nifty 50 index by 10.5%. Out of 9 picks, we already closed 7 picks on target on high price. So all the 7 picks are already been closed. Basket gave the return of 38.5%. So let's talk about the stock one by one. What are those stocks? Why we have chosen this stock in the current environment? Our first stock is Gravita. Gravita India Limited is the prominent player in the global recycling industry. This company recycles lead, aluminium, plastic, and rubber. Headquartered in Jaipur, we believe that the company is growing its volume by double digit. The company expects volume growth of 25% in FY25 and the similar trajectory expect in next 3 years. It's the fastest growing recycling company in India. It has diversified revenue stream, strong EBITDA growth possible in next 3 years. We forecast EBITDA and EPS growth rate of more than 30% for next 3 years. Company expect EBITDA margin to improve from 10.5% to more than 12% in next 3 years. We believe that given the growth trajectory, given the ROE profile, given dominating share in a growing market, we believe that the current valuations are very attractive and we believe that and we set that 1 year forward target of 3,000 rupees. Company offer good upside potential in next 12 months. This is a part of our capex team, that is the global recycling industry, where the dominant share in the growing market of the recyclical demand, which is growing at a faster rate. The next company is Arvind Smart Spaces. So this is a real estate company. We purposely chose in this real estate counter especially to cater the demand which will be the beneficiary of the rate cut cycle. And Arvind Smart Spaces engage in the development of real estate across residential, commercial, and industrial projects. The company operates majority into Ahmedabad market, and other than Ahmedabad, it is into Pune and the Bangalore market. We know that currently the majority of the listed players are into 5 regions, that is Delhi NCR, Mumbai MMR, Pune, Hyderabad, and Bangalore. Now majority of the brands now going to the other territories as an expansionary plan. We believe that the next level of opportunity is beyond top 5 cities, and Arvind Smart Spaces is the Ahmedabad based player, is one of the fastest growing real estate market where the opportunity size is very solid. The company currently having an unsold inventory of more than 51 million square foot, and currently it is running on an asset light model for the quick turnaround with a quick turnaround time. We believe that this company is having a solid track record to deliver all the project on time. This is a solid geographical play of fastest growing Ahmedabad market. Currently, company offers solid valuation comfort. New launches are in pipeline. The company is entering into the new market on top of the Ahmedabad launches, and the booking value is continued to accelerate. This believe that this is a solid pick for next 1 year with a target price of 1085, in which we see the upside potential of almost 37% from the 23rd October price. Let's talk about the next company, that is Inox Wind. Inox Wind is a company with a market cap of 26,800 crore. It is an energy solution provider engaged in the manufacturing and sale of wind turbines generator. Along with that, company is also engaged in the EPC contract. We know that the power sector is growing. So this is a part of our CAPEX theme. CAPEX is the power sector. CAPEX is the agenda of government, not only for this year, this will be for a multi-decadal theme. Right now, the peak hour demand during the month of May, the peak time of summer was 250 gigawatt. We believe that as per the government estimate, this peak hour demand could reach up to 450, more than 450 gigawatt by FY32. And India is currently aiming to increase its renewable capacity by 500 gigawatt by 2030. And this company is catering to this fastest growing demand. Company is currently having a solid order book of 2600 megawatt. We believe that this order book is continuously growing. There is a good value unlocking possible in next couple of years. The current valuations are very attractive. Sector is very favorable. Strong order book and the solid execution capability. Recently, the company is now converting into from loss making to the profit making, and we pegged at close to 1400 crore of profitability by FY27. This company provide more margin of safety because the sector is in favor, and we set the target of 270 rupees with an upside potential of 31% with a CMP of 206. So this is a part of our CAPEX theme. The next is KPIT Technology as an IT export play. IT sector currently is in a very, very interesting time. IT in last 1 month has outperformed all the sectors based on two expectations. The first expectation, less downgrades in the second half of FY25 expectation. The second will be the growth in the CC, constant currency growth for FY26, likely to be higher than FY25. But there are multiple moving levers. But what we believe that IT could be the dark horse team for FY26. In somewhat 2081, we believe that IT could emerge as a dark horse team. And in the current juncture, mid-cap IT companies provide more margin of safety as compared to the large cap player in terms of the overall order winning. We know that right now US is into the US election, so that's why the overall deal wins has reduced as compared to what we have seen couple of year back. The large transformation deal is into the pipeline, but we haven't seen materialize increase in the large transformation deal for the large cap IT players. But for the mid cap players, we are seeing that the constant increase in the deal wins for the discretionary demand. And KPIT technology is specially catering to the discretionary demand of ER&D space, that is engineering, research and development, and especially catering to the automobile EV client, automobile automation. We believe that the stickiness of the softwareization in the automobile clients are very high. And we believe that this is the fastest growing space where the company is able to achieve 1000 crore of profitability by FY26. We believe that this is the right time to invest in this IT stock with an investment horizon of 12 months. It likely to be a benefit and give the fruits in next 1 year. This is a solid company catering to the ER&D space, and that space is the growing space versus the large transformational deal. So that's why we included KPIT in our Diwali Muhurat picks. Strong vertical focus, robust client evaluation framework, and continuing strength in demand environment in the medium to long term. That is about KPIT technology. Let's talk about the next capex play, that is HG Infra Engineering. We know that this year government has planned for 11 lakh crore of government capex. The next budget is planned on 1st of February 2025, and we believe that there will be an increment in the government capex for FY26. So this company is catering to all the EPC contracts, not only for the highways, but this company is expanding its book beyond roads, that is into railway and also into solar panels or also into solar, in which this company already secured 1700 crore project of PM Kusum Yojana. Currently, company sitting with the overall order book of more than 15,000 crore, which is almost 3 times of FY24 revenue. We believe that current order book provide good visibility for next 2 to 3 years, and this company is doing segment diversification. Along with that, we believe that the current valuations are very attractive in the fastest growing segment where the government focus is on the capex theme. We believe that this is a good entry point for next 12 months, and this counter provide more margin of safety because the government focus is on the overall infrastructure building, and we believe that the government capex next year likely to be higher than the FY24 number. Let's talk about the next counter, that is AU Small Finance Bank. This bank is we have picked up based on the rate cut cycle play. AU Small Finance is a mid-cap bank with a market cap of 47,000 crore. It's a retail-centric small finance bank offering comprehensive suite of financial products such as vehicle finance, SME loan, home loan, and the business banking loan. We believe that this bank is very solid bank, which will be the potential, which will beneficiary of the potential rate cut cycle, because more than 60 to 62% of their loan book is fixed in nature, rather than the majority of the competitor who are owning a repo linked book. So if the book is 60 to 62% is fixed in nature, so which provide cushion to its margin performance, which we believe that when the rate cut cycle start kicking in, when the other banks will be showcasing NIM compression for that particular period, this particular bank provide more cushion to its margin performance. Currently, ROA is of 1.6. We believe that this ROA could increase up to 1.8, which is highest among all the mid-cap peers. And this company provide more margin of safety. Current valuations are very attractive. What we believe that we set the target of 800 rupees in next 1 year with an upside potential of 25%. And this bank likely to be a beneficiary of rate cut cycle in next 12-month trajectory. The next is Lupin under the defensive play. Lupin is close to 97,000 crore of market cap company, is a global pharmaceutical leader based out in Mumbai. The outlook for the pharma is very, very solid in the current environment. The pricing war in the US market has reduced. That is the reason all the majority of the large cap and mid cap pharma companies are gaining market share and gaining their margins. Margins are again back to the previous trajectory. The ROE profile for this company likely to increase further. The company is already launched multiple drugs in the US market, and their drugs are successfully captured the market share of more than 30% in the recent time. We believe that the robust portfolio, the product portfolio, strong presence in the US market, and market share capture with the new product provide trajectory for of almost 8 to 10% in next 3 years. And we believe that this company offer a PAT CAGR growth of 22% for and 22% PAT CAGR growth for any defensive company is a solid growth track record. Current valuations are very attractive, and we believe that this company is a defensive play under our Diwali Muhurat pick. One should own one pharma company during this Diwali to safeguard the portfolio for with the recent volatility. We set the target of 2600 with an upside potential of 22%. The next company is the Indian Hotel. The Indian Hotel company owns the brand Taj. We like this space. This is the fastest growing space in the Indian equity market, where the discretionary consumption demand is significantly improving. This time around, in the second half of FY25, there are multiple days for the wedding season. The wedding days are very high. On top of that, there is the exclusive bookings for the corporates, and the foreign tourist arrival in the India is likely to be higher in the second half of FY25 as compared to the first half. We believe that the company is into the asset light model, so the cyclicity of this company has reduced significantly in last couple of years. Given the occupancy level likely to increase in upcoming years, the ARR also increase for this particular counter. We believe that this leadership company or the leader in the Indian hotel industry provide more margin of safety as a bottom up theme for next 1 year. Sustained portfolio growth, net cash and stronger balance sheet provide more margin of safety in the current environment, because this leader has a capability to showcase growth even in the adverse environment. So we believe that this is a solid counter where the second half and the next year is very solid. Along with that, the foreign tourist arrival is in the wedding season provide more booking and more occupancy level, which we believe that this company has provided good upside potential of 22% from the current CMP of 656. We set the target of 800 rupees for next year. The last company into the consumer discretionary is nothing but Uno Minda as an auto ancillary play. This is the tier 1 auto ancillary company which is showcasing giving products to all auto OEMs. We believe that strong business outlook for auto OEMs. The company is now enter into and expanding its product portfolio into the EV localization, We believe that this is a solid 1,000 crore opportunity by the end of FY26, and this DV localization provide more margin profile as compared to the current business. We target the margin, EBITDA margin, to be in the range of 11 to 12%, which is for any auto OEM with the ROC profile of 20% and net debt to equity of less than 0.5% is very phenomenal. The company provide ROE opportunity of 25% and PAT, EBITDA and PAT growth of more than 21% and 29% in next 2 to 3 years. This solid growth trajectory currently trading at a very reasonable valuation, where the good opportunity is robust EV portfolio profile which company is building in next couple of years and likely to introduce 1,000 crore to its top line by the end of FY26. We believe that this is a solid company. One should have it in the portfolio of a ROE profile of 25% by FY27. We provide more good upside potential of 18% in next 12 months with a target of 1090. So this is about our Uno Minda. This is our disclosure. All these are our Diwali Muhurat picks, which provide an upside potential ranging from 18% to 38%. We believe that these picks will enlighten your portfolio and investment journey. Once again, I do wish happy and prosperous Diwali. Do invest in our in Diwali Muhurat picks, and we pleased to present Diwali Muhurat picks for this year with an aspiration that this will further enhance your investment portfolio. With this, I am ending my presentation and I hand over the call to the moderator. Thank you so much for attending this webinar.
Thank you so much for the excellent presentation, Neeraj. And thanks to the attendees for joining the webinar. We are sure that you found the insights helpful and informative. Remember, you can easily add all the stocks we discussed through the small case link shared in the chat box. Wishing you a prosperous Diwali and successful investing. Thank you.